this is time to put some of that tech thinking and that real forward momentum of the fintech industry into philanthropy and into the way that not just high net worth folks give, but to everybody. How does everybody make their giving more intentional, and how can everybody be more generous?
Welcome to the Regeneration Will Be Funded. This is a show about regenerative finance, exploring pathways to a life-affirming economy. I'm your host, Matthew Monahan, and today's guest is Alex Geer. Alex was one of the earliest employees and is now the Chief Operating Officer at Daffy. Just a few years old, Daffy is a fast-growing donor-advised fund with a U.S. focus. I personally am a client at Daffy, and I've seen firsthand the impressive work that the organization is doing. The reason I think this conversation is so important is because donor-advised funds are the fastest growing segment of philanthropy, with now hundreds of billions of dollars of assets under management in the US alone. Daffy is bringing a unique Silicon Valley energy and approach to this space with several differentiators, including their fee model, integration of cryptocurrencies, younger clientele demographics, and how they're integrating social, campaign, and other open software features into their giving platform. Viewers of this show may know we've interviewed others from the donor-advised space and hope to do more, including Cheryl Spain from the Gift Trust in New Zealand and Brad Lebo from EarthShare. Ultimately, the main through line of this conversation and our explorations in this field is how do we move more money more intelligently, faster into the causes that need it. As Alex points out, there are 1.5 million nonprofits in the US alone and tens of millions globally. So how do we get those hundreds of billions of dollars sitting in funds out into the world for good? Okay, let's dive right into the discussion with Alex Geer. We are here with Alex Geer. He is the COO of Daffy. Thanks for being on the show, Alex.
Very excited to be here. Thanks for having me.
Likewise, and I am a happy client of Daffy, and I'm excited to dive into the platform, the project, the journey that you guys have been on. It's an innovative donor-advised fund approach. Tell us more about what is Daffy and your journey with it.
Yeah, well, like I said, thanks for having me on, and thanks for being a Daffy member. I think it's great to see the community that we've started to build at Daffy Charitable Fund. We are a modern donor-advised fund. We were founded about 2.5 years ago. We were really a COVID-era company. Our CEO and co-founder, his name's Adam Nash. He had previously been the CEO at Wealthfront, which is a early company in the fintech space, particularly around robo-investing, a term that at the time was used in a bit of a derogatory way, but I think now has been embraced by a lot of folks in that space. He was on the board at Acorns, which is a savings app, and even teaches a personal finance class at Stanford for engineers, right? So this is something that is near and dear to his heart. And coming out of COVID, he was looking at the world around him, and this was in late 2020, and seeing that some of the people in his network were doing the best they had ever done. COVID was very, very hard for a lot of people, but there were also people who just by luck of the draw of what business they were in or what they were up to, were succeeding in new ways. And so looking at this K-shaped recovery and thinking about the background in personal finance, in using technology to bring financial tools that had only been available to high net worth folks to a much wider audience at Acorns and Wealthfront, this was a natural place for him to go, to say, how do you bring this technology that came from spending and buying things in the consumer side of finance and the investing side of finance and the saving side of finance, how do you bring that to help support causes that people care about, especially when folks are really struggling and those causes need financing more than ever? And so that was the genesis of Daffy at the end of 2020. It was founded in late 2020. I joined the team right at the start of 2021 as one of the first non-engineering, non-design hires to say, how do we build this thing out to build a truly modern donor-advised fund? And we launched in September of 2021 with a fully functional mobile experience for our members to contribute, to make donations, to think more proactively and intentionally about their giving. And we've grown from there. So it's been about 2.5 years since we launched, and I'm happy to talk more about what we're doing at Daffy. But it's a company where everybody who's a part of this experience could be doing something different with their time, but they all were looking at the same inputs at that time and decided, hey, this is time to put some of that tech thinking and that real forward momentum of the fintech industry into philanthropy and into the way that not just high net worth folks give, but to everybody. How does everybody make their giving more intentional, and how can everybody be more generous?
Mm-hmm. Yeah, it really feels like a Silicon Valley startup approach to donor advised funds. And the donor advised fund space is really kind of the fastest growing segment of philanthropy. Can you paint us a picture, and especially for those who might be less familiar with this world of donor advised funds, of like what's happening across the industry and some of the key features and characteristics?
Yeah, of course. So donor advised funds as a concept have been around for about 100 years. They've been in the more mainstream really for about 40 years, since a lot of the big financial institutions rolled them out in the late 80s and early 90s. And the idea with the donor advised fund is that you have a registered 501c3 public charity that can accept contributions, as we call them. They can accept the money from potential donors for an immediate tax advantage, and that can then grow, hopefully tax-free, in an investment that is chosen between the donor who's giving the advice and the nonprofit itself. And so that at the moment when the person wants to send funds out into the world, they have the ability to make those recommendations to say, I set this money aside, it's dedicated for charitable purposes, and we're going to send this to our local school or a charity that I care about. What's great about this is that it allows people to set intentional giving goals, whether they're ready to send that money out into the world or not. And one of the things that we've seen through working with advisors and through academic research is that when people pre-set their giving goals, they set it up, they say, every month this amount of money is going to come out of my bank account, people typically give about 30% more. And that's really powerful. And a big part of what we're trying to do at Daffy is to encourage people to set very clear giving goals and to sort of set it and forget it, so that every month those funds are transferred, so that when they do want to make those donations, they're ready to go. And this is the donor advised fund concept over the last 40 years. It was sort of a slow build. And then over the last 5 or 6 years, there's been a real explosive growth in this space, both because it's such a great opportunity from a financial perspective and a tax perspective for a lot of members, but also this idea of people wanting to be more intentional about their giving and more thoughtful about their giving and set funds aside at the right moment and then put those funds into use out in the world to operating charities at the right moment. That's a really powerful position for donors to be in. And we launched about 2.5 years ago. We're growing incredibly rapidly. And part of that, I think, is because not just the high net worth folks, not the people who have advisors managing their money, but a much wider range of people are starting to see the real benefit of a donor advised fund for their own personal situation, even if they're not, 10 millionaire, 100 millionaire kind of level. Even at the low levels, we're starting to see people do that. And I think that's been a big part of why DAFs have grown so quickly.
And is that what Adam is referring to when he talks about the generosity gap?
That's it exactly, right? So we have a professor from UCLA who's one of our advisors, and his life's work has been to look at how do people give and what are the metrics that make them give more, make them give less. And we talk about the generosity gap is if you go out and asked 100 people what they wanted to give, how many of those 100 people would actually say, I achieve my goals? We're all taught in one way or another, whether it's from a teacher, a parent, a mentor of some kind, we're taught about the importance of setting funds aside and giving them to causes that are important to us, that might be underfunded, that might need our help. That's part of almost every culture in the world, part of the learning. The modern world has made that harder for a lot of people. There's things pulling you in every direction possible. There's people asking for your money constantly, but people still want to achieve their goals. They still want to match the giving goals that they set for themselves. And so part of why we built Daffy and from day one talked about this generosity gap is to say, if we can get the millions of people who are donating every year in the US to give 30% more. That's what they would on average say they want to give relative to what they actually give. If we can get them to close that generosity gap, that is an incredibly meaningful amount of money. We're talking tens or hundreds of billions of dollars across all the givers in the US. And so it's a massively ambitious goal that we're asking our members to set these goals and actually follow through on them. But I think it's getting people where they actually want to be and what will make them feel good about their own personal philanthropy.
Mm-hmm. Right. Okay, so donor-advised funds create this asynchronous relationship between when you can take your tax deduction and when you actually give the money out.
Yep.
And that key aspect makes it very ideal from a tax perspective for a lot of people. And then donor-advised funds create this ability to essentially have like your own private foundation without all of the overhead of filing the IRS paperwork and having a board of trustees and all the rest. It's like as simple as, okay, well, now I want to give to this project, mark a recommendation, and as long as it qualifies and is charitable, then the donor advised fund takes care of all the administrative work. And the costs of donor advised funds generally make that a good opportunity for people. Yeah. So, those conditions have led to this surge of now hundreds of billions of dollars in donor advised funds. But, one of the critiques, and, you mentioned before the conversation, you saw our conversation with Brad from EarthShare, we dove into this quite a bit. Like a lot of that donor advised fund capital is sitting in traditional stocks and bond portfolios and not actually getting out to the nonprofits. Right. So, yeah, I want to piece that question apart. And also, I'm curious because you have such a product development focus at Daffy, how are you trying to design the experience to make sure that money is moving?
Yeah, this is something we think about pretty much all day, every day. We are incredibly grateful and supportive of our members setting funds aside, whether it's appreciated assets like stocks or mutual funds that they've held on to for a long time. We accept crypto, but we also allow people to contribute via Apple Pay or cash, right? All these sorts of things. We are incredibly grateful and excited when people do that. But the real gratification we get, and I get personally running operations, is when that money goes out to the causes that are important to our members. That is the reason we're doing this. We're not doing this, as a group purely to help people set money aside. It's that next step, I think, that is the ultimate goal for what we do. And so we've tackled that in a few different ways, because I certainly agree that we would love to see payout rates across the industry continue to go up. And one of the ways we've done this is fundamentally from the start, we have said, we are not going to have a traditional assets under management model. We're not going to take a piece of the AUM every year. And that is very different in this industry where donors are typically charged by the donor advised fund sponsor by a AUM fee that comes out once a year, typically around 60 basis points, 0.6%, but it can be more, it can be less. But it is in direct relationship between how much money has been set aside and is being held there. We charge a flat membership fee based on product usage. So if you just contribute cash, you're in our bottom tier. It's $3 a month, a contributor tier. That's a vast majority of our members look like that, where they're paying $3 a month in membership dues to help support the business. It goes up from there, but right now we're capped out at $20 a month for our top tier. And what that means is that we can focus not on the number of dollars that we are holding or have been set aside, but we are actually trying to build a community of giving where it's the people and not just the total dollar amount that is what we care about. And
sorry to interrupt you there.
No.
I just want to, I guess, reinforce that point as a client.
Yeah.
I'm a part of, 4 or 5 DAFs. And for different strategic reasons of DAFs, donor advised funds tend to be good at certain aspects of the capital stack and of the giving experience. But also just to have these relationships and to learn more about the space. And Daffy's the only one where I pay $20 or $15 a month or whatever it is. And I've joked with you before, I'm like, you're not charging us nearly enough because everyone else charges us a percentage of the balance. And that's a huge shift in business model. And so I guess on one side you could argue, well, because there's no fee of the assets under management, maybe I'm more incentivized to just sit on it because there's nothing that's kind of like churning away.
Yeah.
But in reality, I think what's profound about it is it changes your incentive.
Exactly.
Because your incentive is no longer grow assets under management as your key of making money. Your incentive is to actually make sure that the money is getting out the door and that you're attracting as many clients as possible. And that's just a fundamental shift.
Yeah, and I think that community piece is hugely significant to us. We know from talking to our members that they might not be comfortable talking about their salary or their 401k or these sorts of parts of their financial life, but they are much more comfortable talking about their charitable giving. We have, you go to a school or a community organization, you might see literal dollar amounts on a wall next to people's names of how much they've given. It's a very different part of people's financial lives. And so nobody is opening a donor advised fund account to send fees to the donor advised fund sponsor. That's not why people are doing this. It's just a byproduct of how this works. They're doing it to get as much money, we think, and this is what we see largely, is they're doing it to see their funds grow and to get those funds out to the causes they care about so they can talk about it in their community. They don't want to talk about sending 60 basis points to their donor advised fund. They want to talk about the money that they sent to their kids' school or to their favorite nonprofit. And so part of our model is to help people be more transparent about what they're giving, but also to let them give as much as possible out to those organizations that they are excited about. Because realistically, nobody's that excited to be paying money to their DAF sponsor, if it's an AUM fee especially. And so that's a big part of why we've done this. And we know the reality for the existing donor advised funds is $1 million account where they're holding $1 million may be worth twice as much as a $500,000 account. So $500,000 going out into the community, not necessarily ill intent there, but just unintended consequences of somebody making a $500,000 donation on $1 million account. That's a significant change for that donor advised fund sponsor. And so by changing our model and looking to companies like Acorns, other companies in the fintech space who do run on this monthly model, I think it takes away any sort of incentive there to say you have to hold your money in the DAF account before you get out into the world.
Is the plan to still make money from the investment portfolio management though on the AUM?
That's not something we do today. We put the funds that are received by the portfolios, the increases, into the portfolios. And there are, of course, ways as we continue to grow that we have to explore how we support ourselves. But right now, our goal is to support our members, that if growth comes, that it goes into members' accounts, into their attribution. And I think that's one of the really powerful things about donor advised funds, and why this model of taking the tax deduction at the point of the contribution and sending the donation out later is meaningful, is because with the way that DAFs can be set up, you could, if the market goes up, the funds in a particular DAF account could go up as well, which gives you even more charitable impact. You put aside $100, the market goes up 10%, you have $110 to give. And so that's also really powerful for our membership base.
So where can people store their funds when they choose their kind of portfolios?
Yeah. So right now we have 15 different portfolios that are available for our members, and we're still getting started and adding more. I think we have some...
I think when I joined you had 2 or 3.
We had fewer, and we worked with you and your team as well to think through some of the ways we could better support certain things that were interesting for you. And, that's not something we'll generally do across the board, but we do want to continue to look at ways for people to add more customized options as long as they fit within Daffy's investment committee's decision-making of how the overall portfolio has to look. But today we have 15 portfolios that range from conservative options, straight money market accounts, inflation-protected bond accounts, things of that nature. Those are great for people who are looking to give in the relatively short term typically, or just simply don't want to take any risk with their portfolio. All the way to, we have ESG options, we have standard diversified options that are a mix of international, but some US only. And then we have some crypto options. We actually just rolled out our first Bitcoin ETF portfolio that includes some exposure to Bitcoin ETFs, partnering with Bitwise to do that. We have pure crypto portfolios with our partner Coinbase. So that I think is a really unique place for us as well, both on the receiving crypto as a contribution method, but also allowing our members to have some crypto exposure in their charitable portfolios as well.
And can you share more about that receiving crypto and how that works?
Yeah, so we've partnered with Coinbase, directly integrated into our mobile experience, but also our desktop experience. The mobile one, I think, is pretty magical. That we allow somewhere in the neighborhood of 220 different crypto coins. Anything that Coinbase accepts, we can accept as well, where we can generate a custom wallet address for each member. They can make as many as they want or do it as a one-off and send us the crypto. And when we receive it, we liquidate it. We'll move the funds to the member's recommended portfolio. And why this is super cool and something we're really excited about is that there are in the neighborhood of 1.5 million registered 501c3 public charities in the U.S. If you had churches and schools and other things that don't have to register, you're in the 1.7, 1.8 million range. A vast, vast majority of those are uncomfortable with crypto or they want to accept it. They just don't have the infrastructure to do so. They're a small team, whatever the case may be, taking crypto directly as a contribution is really hard. And so what we allow our members to do is to take those 220 different coins and say, you know what, I want to send Ethereum, Bitcoin, or even some of the longer tail crypto coins and send it to their local church. Well, we can be the intermediary in there and do it as low cost as possible to get those funds to that organization as quickly as possible without them having to go and register and figure these things out.
So I can send you $1,000 worth of Ethereum to a crypto address that's just connected to my Daffy account. And then I can give that $1,000 to a local food bank in regular US dollars.
Correct.
And so I'm using Daffy as the intermediary to facilitate that because my local food bank doesn't yet have their whole crypto wallet set up or doesn't want crypto, or that's just not kind of the vibe right now. But this is, so there's a convenience and a infrastructure piping, 0 to 1 that's really important there. But there's also a really important tax point here. If I have my $1,000 of ETH, well, if I bought it for $500 equivalent, I could have just sold the ETH and then donated it, but that actually wouldn't be nearly as tax advantageous as sending the ETH. And because we have some Web3 audience here, maybe it's worth just like honing in on this one particular point so that we can try to increase the amount of giving in this way. How does that work?
Yeah, so this is true of basically any long-term appreciated asset. So think about stock that a member has held for over a year, mutual funds, ETFs, but crypto is very significant here for a lot of our members because so many of them were early into the crypto space, have potentially very low cost basis on that crypto. And so the two scenarios you outlined are exactly the differentiator, right? So if you sell the crypto into USD and then make that contribution to a donor advised fund or an organization directly, let's say, that difference is that you're paying capital gains tax on the sale of it. And then when you're sending the cash, that's the amount that you get to write off in terms of your adjusted gross income. The other side of that is if you send the crypto directly to Daffy, you are not paying capital gains tax. We're liquidating the crypto and sending the cash to the organization. And you're able to deduct the full value of the crypto up to whatever the IRS limit is in your particular situation. And that can be a really meaningful difference, especially for people who have low cost basis securities. There's a whole bunch of caveats here, and my usual answer must involve, talk to your own tax professional to make sure you're doing the right thing for your situation. But for most people, direct contribution of stock, direct contribution of crypto that you've held for over a year can be really powerful. Go ahead.
I'm just going to add the caveat as well for all my friends. Sadly, this doesn't apply in New Zealand the same way because New Zealand looks at the disposal of property as a taxable event. So, this is more applicable to our audience in the United States.
And that is worth mentioning as well, that for now, the charities that are in the Daffy database are U.S.-based public charities. They're registered with the IRS. A number of them have operations that are overseas but have a U.S. registration. One of our longer-term thinking is how do we explore other countries that have similar financial instruments like donor advised funds. But yes, it is a good caveat that what we're doing today is for the U.S.
So this doesn't just apply to appreciated crypto, though. This applies to any appreciated property, notably stocks. Is that right?
Yeah. And so today, Daffy does accept virtually any publicly traded stock and ETF and mutual funds as well. One of the things we're continuing to explore as our philosophy is around how do we make giving of all things easier for our members is there are assets that are just really complicated to donate to charity. And we have ways of working with third parties today to help our members when they do have something that is more complicated and figure out how we can accept that as a charitable donation. But that's one of the big things we're excited about in 2024 and beyond is how do we figure out a way to work with our community of givers to take even more than just the appreciated stock and crypto. But today, you visit Daffy and very, very quickly send crypto, stock, mutual funds, et cetera.
Any fun examples of crazy things that are being donated?
I think it's been nothing too exciting, but given where we are and what our audience looks like, private stock and business interests is the main thing that we get asked about. And there's a tremendous amount of value that is being held in the US and around the world in these illiquid assets. And so thinking through how does a future look where you can find liquidity in these things that can get some of the benefit out into the world, I think that's really exciting for us and something we're diving deep on this year. And hopefully, we'll have more to share on that in the future. But yeah, it's mainly that private stock that our members are looking to donate. And it gets me to this point as well, that our membership base does not look like a traditional donor advised fund or a traditional charity. Knowing from research and from talking to other charities, the typical donor is in their 60s in the US. That is what the average donor looks like. Our median donor is 41 years old. And a part of that is that we are a modern platform. We are mobile focused. We have a great web experience as well, but we do have an audience of early adopters and people who are on the younger side. And so a lot of those people who are thinking about new ways for their own personal philanthropy are thinking about some of these more unconventional pathways to giving, be it crypto or other sorts of assets.
Yeah, great. So back to the giving side, like what else can you point to in terms of ways you're trying to, move capital and kind of innovate on some of those feature sets?
Yeah, so the social piece is a big part of it. Giving is, like we talked about, is different from other parts of your financial life that you want to talk about it in a lot of cases. There are certainly reasons you want to keep it to yourself, but if I'm trying to raise money for a cause, the best way I'm going to do that is to talk to my friends and my family and my community about why that's important to me. And keeping giving in this private silo removes that conversation. And so through our last 2.5 years of being out in the world, we've rolled out a bunch of features that we think help expand that conversation. We started with family accounts. So today, you can add up to 24 family members onto your account to help facilitate multi-generational giving. A lot of that wealth is concentrated in parents and grandparents, but they want to involve younger generations in that conversation about what causes are important and what the future looks like of the family's giving. And so today, you can add up to 24 people onto the account that are part of the family and can see what's happening in that account and even make donation recommendations that will then go to the organizer of the account, say, hey, my grandson wants to give $50 to this marine science charity. Perfect. This is a great way to start a conversation and to do it right there in the Daffy product. We most recently rolled out a campaign functionality, and this goes back to some of the conversation we had about funds that have been set aside but haven't yet been deployed. One of the biggest challenges for nonprofits today is they know there are hundreds of billions of dollars that are sitting in donor advised funds. The members have taken their tax deduction already. How do the charities start to access some of those funds? And as you talk to nonprofits, this is always one of the top things that they're thinking about, especially as donor advised funds grow. And so we rolled out this campaign feature right at the end of 2023 to allow our members to create campaigns that not just are visible to Daffy members, but to all of their community. And what we've really seen is that people who have already set those funds aside, it's so easy to be generous at that point. You have this account that says you have X dollars in it. Here's a campaign that somebody in my network is excited about. I don't have to get out my credit card. I don't have to send funds in. I send money directly from my Daffy account. And that's been really powerful. We ran a campaign with a number of food banks at the end of 2023 that are focused on food insecurity in the Bay Area. We partnered with them with Daffy members who committed to do matching. All of that happens directly in the product. And we saw some really awesome success stories out of there. The San Leandro Food Bank, for example, was one of those charities where they received far more from that Daffy campaign than they would have if that was a fundraiser in a more traditional sense, because those funds were already set aside. It became so simple. And so we're just getting started with this. But one of the great things about, I think, the approach we're taking here of being tech forward, thinking more like a startup, is that we're shipping things on a weekly basis. Totally. This isn't a once a year, we're going to do a slight polish on the home screen. We're trying to ship things as often as we can and let our community take a look at it and give us some real-time feedback of what's great, what's not great, what can we do better. And that's been a really fun part about being part of this journey.
Yeah. Yeah. I mean, at the risk of sounding like a paid advertisement, which is not, I just believe the truth of what you're saying. I mean, like, it's the only donor advised fund app I have on my phone. It's the only one I check that I can actually see the demonstrable progress from a user experience design perspective, from reporting, from the graphs, seeing people in my feed giving to causes, shouting things out. I love many donor advised funds in the space, but they typically have kind of a more back office financial reporting type of experience that's quite, simple.
Yeah.
And then you just rely on kind of the customer service touch points to do a lot of things. And I think what you're painting a picture that I get really excited is, like, by investing in these user experience features, the technology, kind of bringing it closer to the everyday person and consumer, we can unlock more funding and to actually kind of bring capital into these causes and projects that really need it.
And that's exactly how we think about it. I mean, I have tremendous respect and understanding of how this industry grew well before Daffy or myself got into it, right? There's a long path here that's been paved by people with very good intentions who have worked incredibly hard and distributed billions of dollars. I think that is absolutely worth saying, is that the people who have put their heart and soul into philanthropy and getting folks to be more generous, we wouldn't be doing what we're doing today if it wasn't for that. And your story is not uncommon, of people who have multiple donor advised funds for multiple purposes. That there are people who want part of their giving to be housed at Daffy and to have the app so that when they're on the street and somebody says, "Hey, I have this organization I'm really passionate about," you can pull out your phone and within a few taps do it. There are certainly great reasons that people are involved with lots of donor advised funds and lots of charitable organizations. So that's totally true. But we're really focused. Daffy stands for the Donor Advised Fund for You. Our focus is, as we've talked about repeatedly, is on the people and not just the dollars, and building that community of givers. And when you look at the community that we've worked on for the last 2.5 years and are continuing to grow, a large majority of them are relatively small accounts. We support people with no minimum. You can sign up without having to put any money aside today. So many of our accounts are below the minimum threshold even to start an account at some of the more traditional donor advised funds. We do have accounts that go up into the tens of millions. And so we have this wide range of members, but it is really significant for us that it's not just about how do you best support this layer of tens of $1 million accounts, $100 million of accounts. How do you support people of all areas of giving to create this really frictionless experience and help them meet their giving goals? And going back to this idea of crypto, we talked about the tax advantages, but one of the most fascinating things I think we've seen from day one is that there are people who hold crypto where the tax piece is not why they're giving. Our median crypto contribution into a Daffy account is right around $1,000. Our median stock contribution is around $7,000. So these aren't contributions that are making massive tax impacts or to take advantage of that. Certainly we have people who are giving millions of dollars in those two categories. But what I think is so awesome about the crypto giving that we're seeing is that $1,000 is somebody who has said, I have a little bit of crypto. I want to give it to a cause they're not ready to take it, and I'm going to use Daffy to help distribute it. It's not for some grand tax benefit. And I think that's been really special to see from our member base. And I think tells us that we're on the right track of being able to support people at all levels of giving.
If I'm a nonprofit hearing all of this, and I'm like, I want to get involved more meaningfully in the Daffy ecosystem, how does one do that?
Yeah, so we have a small team, but we have a team that loves talking to nonprofits. They are one of our sort of biggest groups of stakeholders, obviously. And so we have ways on the site to pretty quickly get connected to us. Campaigns has been a really awesome opportunity for us to work directly with nonprofits in both, like I talked about, the food insecurity space, but here for Earth Month, we're working with a number of our members to help them run campaigns, but we're also working with nonprofits as well who want to explore how they can reach Daffy members. And so I would say visit daffy.org and reach out to us that way. We're certainly happy to talk.
And you mentioned Earth Month, and we are recording this on the day that everyone shares their images on social media celebrating Earth Day. But can you share any perspectives about funding in the climate space and for environmental causes?
Yeah, I mean, for me personally, I think this is my area of giving that I'm most focused on personally. I remember growing up and electric cars were my thing as a teenager. My dad and I used to tinker quite a bit. So driving around San Francisco today and seeing all the electric cars of every variety, I think has been really. I'm always reminded of how much progress has been made in the last 20 or 30 years. So for me personally, it's a very significant issue. And looking around, seeing the urgency of these things, I think is pretty clear, even relative to pre-COVID and 5 years ago. The urgency feels there in a different way. Daffy is a national donor advised fund. We have members who support causes of all different types, but environmental causes are certainly one that our members choose to highlight. And so part of the social layer that we've tried to build is to give people the opportunity to publicly say what they're supporting and to identify organizations. We hear from a lot of our members that they might know the big nationals, but when it comes to what's an organization that is doing something meaningful in my local community? What's an organization that's doing something in a more specific area that I care about? That's really hard. And so trying to build products that allow people to share what's important to them and the organizations that are doing the good work that they are supporting, I think is really significant and something we're continuing to explore. And then this campaign feature, I think we're seeing some really great traction there as a way for people to say, I want to support this particularly climate-related cause, to put it out publicly and to find Daffy members who are like-minded. When you sign up for Daffy, you get to choose the different impact categories that are most important to you. And it's just a really great way to start to spread the word about some of these things. But we're still getting started here. We're early days on this. And I think that is one of the most exciting areas of growth that we have is how do you connect the donor with the nonprofit and build those bridges so that money that's already been set aside becomes more available for these sorts of organizations. And it's what I'm tremendously excited about building because again, getting people to set the funds aside, that's step one. Step two, that's going to really make a difference in this world is them getting it out to the organizations who are doing the good work on the ground.
Yeah, couldn't agree more. I mean, I think that the psychology at kind of an individual, smaller donation level, to me, is very similar to even the psychology of the large foundations, which is you have this capital that's kind of liberated from either a debt or strong growth incentive. You don't owe it to investors or some sort of shareholders. And it's in this kind of untaxed generosity ecosystem earmarked for charitable cause. And then there's people with decision-making influence of getting that capital to nonprofits. But the pace is highly variable.
Yep.
And the curation and selection is also all over the map. But we wake up today in 2024 with literally over $1 trillion in the United States alone, but hundreds of billions in donor advised funds now, where this is the opportunity. And so the question is like, well, how do we intelligently move it more quickly?
Yep.
right? Because what we're trying to do is compound value, not compound investment returns. And and I know that for many nonprofits that I'm in relationship to, it's immensely frustrating because the need is there and the money's not flowing. But I also, empathize on the other side of how difficult it is sometimes to figure out what is the most impactful way. And there's a sense of responsibility and a passion for people to want to make as much impact as possible. And so I think it's a lot about relationality, building relationships. We kind of talk internally at Biome Trust about like conviction threshold. Like, how do we actually get a conviction established amongst our stakeholders? Because we can look at something and go, well, yeah, that's good. That would be good. But like, what's our threshold before we actually say, yes, that is impactful enough and strategic enough for our aims to hit that donate button? And so I think the tooling can support this. Obviously, it's not a silver bullet, but how do we think about that middleware between the nonprofits and the donors and building those relationships?
I think that's exactly it. And there's so much siloing that's going on, especially at the high end from conversations I've had where somebody who has millions of dollars to give out will go commission a study and say, help me find these 10 organizations that I'm going to distribute my funds to. Somebody goes out and does this amazing work. They go and look into these places to say, are they making an impact? Are they spending money in ways that match the charitable vision? Do we get to that level of conviction where we can feel great about sending big amounts of money there? And then somebody takes that report and it goes in a drawer at that point. And I've heard this time and time again with issues. It's not just limited to environmental causes. I've heard it with education. I've heard it with sort of social service things. And I think one of the things with tech that I'm excited about, we're not there yet, but how do we work with our members who are doing this work already to start to socialize it and build those kind of conversations happening on the Daffy platform? There are platforms that exist for this outside of philanthropy, right? If you think about something like LinkedIn, that's a place where people are sharing all the time. This company is great to work for. This is my experience. We don't have that same community around giving that is established today. And I think there's a real opportunity there as we continue to look at our next set of features and working with our members who are doing this work, or is there work that we could look at internally as well to help members who don't have the funds or the desire to put those things to get the conviction on their own? Because I think our members that have very large accounts are looking for conviction in that way, but everybody is. Nobody likes their funds that they've set aside and that they're excited about to go to organizations that might not support the things they actually care about or might not be using it in the right way. And the more we can start to socialize those kinds of conversations and take it out of the desk drawer and make it available for a much broader membership, I think the better off the space will be. And I think it will benefit the organizations who actually are delivering on the promises that they lay out and are working on the world's biggest problems.
We're seeing a lot of discussion in the Web3 space about ways to streamline that impact reporting and attestations. We had a bunch of conversations recently at Earth Commons event in Berkeley with folks coming out of Gitcoin, Hypercerts, LiquidCerts, a lot of interesting experiments to essentially create standardized logics for being able to see, okay, my money went in and it had this impact as a way to increase that velocity and that fairness across the ecosystem. It does, of course, risk over financializing or reducing down things that aren't necessarily always easily measured. But yeah, curious what you're seeing in that space and how you think about it.
Yeah, it's interesting timing. I've talked to a number of organizations in the last 6 months, probably, who are starting to use blockchain technology to track where things are headed. And this has become particularly, I think, valuable in crisis moments where things are muddy. Things are hard to do when there's a fire in Maui or when there's unrest in the Middle East or these sorts of things. Funds go out that are very hard to look at. And I think there are some organizations that are starting to use some of these modern tools to better ensure as much as possible that supplies and funds and these sorts of things are getting to where they need to go. There's a long way, I think, to go. And it's not something that Daffy is directly involved in today. But as we look at our own membership base and our own partnership relationships and the work we've done in the crypto space, I think there is opportunity for us to push into that space in the future because there is very good reporting in the nonprofit space. I mean, part of this is part of why you get to not pay taxes is because you're going to share a lot more information about what you're up to.
Right.
But it's a system that has, like I said, 1.5 million organizations who are out there in the U.S. alone, and you start to think globally, it's tens of millions of organizations that would be classified as nonprofits or charities or these sorts of things, and that's very hard to keep track of.
Yeah, I mean, it feels like there's just so many impact reports that clog the inbox and glossy PDFs with beautiful photos, and and you're just like, but. At some level, like where is it really making a difference, and how do I know? And it's working at some level, of course. It's just the question of like, how do we keep improving?
Yeah, it's a challenge, and we as a donor advised fund, we have obligations to ensure that when a member makes a donation recommendation, that we're doing the diligence to best we can, that they're registered in good standing with the government, that funds are going to charitable causes, they're not. Being investigated for fraudulent behavior, all of that we do. And it's a very manual process and is an operational challenge. It would be fantastic to continue, and this is what we're trying to do, is to continue to use technology to better highlight the charities that are doing things that the funds are actually making a big impact, and get those in front of folks who do have those funds already set aside.
Got it. Daffy's structured as a nonprofit, but then you have this kind of interesting hybrid structure. Can you share more about that?
Yeah, so Daffy is a registered 501c3. All donor advised fund sponsors are required to be 501c3 public charities. So Daffy's registered with the IRS, registered in all 50 states, so that our members, when they make that contribution into Daffy, can take the immediate tax deduction. That is fundamental and true for all donor advised funds. Almost all of them, especially the larger financial institutions, are partnered with a for-profit entity, whether it's Fidelity and Fidelity Charitable, Schwab and Schwab Charitable. We're structured in the same way, except rather than a financial institution that's the for-profit partnership, we have a technology company. So we actually have a venture-backed startup called Aside Inc. That builds the software and the tools that help us run Daffy. What's really exciting about that is that there are a lot of people in this space who have tremendous intentions, who are smart and passionate and caring people who are trying to make this space better, but it's the financing and the funding that runs out. And so by taking a bit more of the traditional Silicon Valley venture-backed approach, it's allowed us to bring on a really great team to continue to ship, to run like a startup. And I think that's put us in a pretty unique position to build tools that are great for Daffy. Daffy is the first client on the Aside platform, but hopefully someday to build a set of tools that we can make available to other donor advised funds, other nonprofits who are looking to improve their own giving platforms. And that's really, I think, a future-looking goal for us.
Yeah, the next meta on this is to, I guess, help bring your technology to more implementations.
And that's one of the things that I think is special about this space, is that there is this sense that if an organization is doing something well,
totally,
let's get it out there. And so we're really excited about the progress we've made at Daffy, working with the Aside platform. There's more work for us to do to build this out, to be ready to push out into the world. But we're continuing to learn and discover and test, and hopefully there are other people in this industry who are picking up signals as well of what's working for us that can help up-level people across this space.
Yeah. Are there any other feature sets I didn't ask about or aspects of the platform you're excited about?
Yeah, one thing we're really thrilled about is that we launched open APIs last year. As a tech company, again, I don't think I've seen this really anywhere else in the donor advised fund space, but we've actually opened up our APIs not just for our members, but in certain cases, partnerships as well, to allow folks to integrate giving into other parts of their financial lives. And we've seen examples where in small cases, people have integrated their own Daffy accounts into Slack bots. So if somebody in their company is doing particularly great work, they can type in a command and send a $20 Daffy gift to whoever that was for the day. We've also worked with larger partners to open up Daffy giving into websites where people are already making charitable choices. So they don't have to go to Daffy and log in. They can do integrated giving directly from a charity's site. And we have some real ongoing conversations about how can we bring in that login experience, bring in that contribution experience, that donation experience into existing fintech apps where people are already thinking about their budgeting or their money. And so that's something we're continuing to talk to folks about, and people are certainly welcome to reach out to me as well, or visit daffy.org for more information about those personal APIs. But I think it's a really cool feature that we rolled out last year, and we're starting to see some traction around.
Terrific. Well, there's certainly no shortage of things happening over there. How many clients now? How much capital under management?
Yeah, so at the end of 2023, we put out our own giving report. So we shared some numbers, and we're continuing to explore ways to talk about our impact. But at the end of 2023, we had over 4,000 Daffy members. We were had a really strong year. We grew over 400% in 2023. We've continued to grow into 2024, I think both because of market movement, but also just people have been inspired to give, and there's starting to be some real momentum around it. And we're over $140 million under management today. We're still just getting started, but important milestones coming up for us, and we're excited about the path we're on.
Awesome. Yeah. I think I remember when that was under 10. So congratulations on all of the progress. Any key challenges, roadblocks, things keeping you up at night?
Yeah, think about that for a second. I mean, I think
besides the kids,
I think the running a DAF and the operations around it, I think are challenging, and that's why there is some barrier to entry. But I think we're positioned to do things in a way that allows us to scale without hiring and without building out the size of the team to keep our costs down. We are able to offer today a solution that is great for our members. From my perspective, we're always getting better, and we're continuing to roll things out on a regular basis. But I think finding a way to scale up those operations, I'm the COO, so it's what I think about on a regular basis, is really significant, because we want to keep delivering this amazing experience to our members, whether we have one member just starting out or we have tens or hundreds of thousands of members, because when we're focused on people and not dollars, we want to deliver that experience to everybody. And so that's where I put a ton of my brain power every day is let's continue to evolve this product. Let's keep making it better. Let's deliver fantastic support and service, but let's do that as well when we're not 4,000 or 5,000 members, but we're 100,000 or 1 million members. That's really what I'm focused on.
Alex Gear, COO of Daffy, daffy.org. Links are in the show notes. Definitely a project to watch. Any final words?
I'm so happy to be here. I think that the challenges that you and your team and your group are focused on are tremendously important. I have 3 kids. The world that they grow up in is going to be, I think, impacted in ways that are unimaginable by the work that folks like you are doing and our members are doing to make their communities, to make the world a better place. And any part I can do in that is just exciting and brings me great joy. So thank you for having me, and thank you to everybody who's participating in this journey together.
Okay, what did you think of that discussion with Alex? Please let us know in the comments below. To learn more about Daffy, go to daffy.org. And don't forget to subscribe to our weekly newsletter featuring the latest happenings in the regenerative finance and economy space. Who knows, maybe we'll have some Daffy campaigns to feature there soon. Just go to maearth.com, where you'll also find all of our conversations about donor-advised funds, philanthropy, impact investment, and much more. Thanks for tuning in, and I'll see you on the next one.